Hi, this is Jordan Moorhead, and this is the Austin Real Estate Investing Podcast. Today we have Deepa Akula on here, and she is the managing principal at JT Capital. And she's going to talk with us all about what they're doing here in Central Texas and going to tell us a little bit about asset management here too. Hey, Deepa, how are you?
Hey, I'm good. Thanks, Jordan. Thanks for having me on.
Of course. Thank you so much for coming on. Most important question we ask here on the Austin Real Estate Investing Podcast. What is your favorite restaurant here in Austin?
So I have to qualify that by saying I've only been to Austin once,
Mhm.
and I dined at a Thai restaurant named Sway, and it was pretty good. So for the lack of any other data, I'm just going to go with Sway.
Yeah, you picked a great one. That's actually an amazing restaurant in West Austin here, and it's probably the most popular Thai restaurant we have in town.
Really? Oh,
Yeah,
then my friends knew what they were doing.
yeah, really high quality, good stuff.
Nice.
Yeah. Well, awesome, Deepa. Can you tell us a little bit more about who you are and how you're involved with real estate investing?
Sure. So, by background, I'm a mechanical and aerospace engineer,
Mm,
and I work at JD Capital. I am a managing principal, and at JD Capital, I'm part of asset management. And um, I'm so sorry. Can we redo this? I know it's recorded. I
sure.
just got
No.
distracted by something.
Well, awesome, Deepa. Great choice there with Sway. Could you tell our audience who you are and how you're involved with real estate investing?
Absolutely. I'm a managing principal at JD Capital, and I'm part of the asset management and investor relations team. And I also concentrate on marketing and branding.
Okay, awesome. All very important roles. So sounds like you've got a lot going on.
It's
Um,
busy.
yeah. So I know we've talked to a couple other partners on your team, but I would love to just hear more about your perspective. How did you land on investing in Austin for your investments around here?
So we have one asset in Austin,
Mhm.
and we concentrate on Central Florida now. But Austin was on the radar because a couple of the partners at JT live in Austin.
Mhm.
And I know Austin is just so hot, has been for the past decade. And we found a really great asset. And um, as soon as we closed on it, we knew it was a good asset to begin with. And it was in a good area where the median income was on the higher end. And after it closed, I believe Google had a plant right next to it.
Mm.
So the value really shot up after that.
That's amazing. Yeah, I know there's just so many big companies moving into town here, and if you can buy something around where something is either going in or where they're developing, usually can end up in good shape.
Right.
Deepa, I know you said you were working as a mechanical and aerospace engineer before. What attracted you to real estate investing?
So my journey, the career trajectory to commercial real estate was
Mhm.
really very serendipitous. I started investing as an LP
Okay.
and really liked the concept and just wanted to invest as a limited partner and liked it enough where I'm doing this full time now as a sponsor.
Mhm. Wow. And that's like they tell you to do that a lot of times. They say, hey, if you want to be a GP, start as an LP, but you don't meet so many people that actually ever make the leap. So you liked the concepts enough that you just said, hey, I'm gonna be a GP. How did you get connected with everybody at JT Capital?
Oh, so my story with JT, I first got introduced to them as an LP,
Hmm.
and I
Oh,
actually
cool.
invested in that Austin deal.
Oh.
Yeah, that we spoke about.
Hmm.
And I was an LP for a few years, and then there was an opportunity to be a co-GP. And that's kind of, it was really step by step. And I was a co-GP with them and worked on a few deals. And after that, they were like, hey, we are expanding and would you like to join the team? And by this time, I knew everybody on the team and
Hmm.
I've done a lot of due diligence on them. And I went to due diligence to Florida for different properties with the partners and liked them enough where it was thought it was a good opportunity to join them.
That's cool. That's awesome to hear. You again, you hear so many times people recommend following that path. You actually did it, and You said it took you a few years. When was the first LP investment to the point that you became a GP, just for
Right.
context?
So I started learning, and I was working I had a full-time job as an
Hmm.
engineer
Hmm.
until 2021. And I started learning about syndications in 2017. And I had analysis paralysis and did my first, I'm an engineer, right?
Hmm. Yeah.
And did my first LP deal in 2019.
Okay.
And 2 years from there, I believe was my first GP deal. So it was 2 years from when I started learning to when I started investing to when I became a co-GP.
Okay. And do you still have a
Yeah.
full-time job too?
No, I don't.
Okay. So
Yeah,
when did you said your first investment was 2019. When did you quit your
right.
full-time job?
Right. In 2021. And I actually did
Oh.
not quit. I was working as head of engineering,
Hmm.
and there were mass layoffs, and the whole engineering department was laid off. And it was a hard decision to not be in engineering anymore because I had a few good offers in hand at that time. I was calling clients saying, "Hey, we are shutting down the department," and they were like, "Oh, so are you available?" And I had like four offers telling people that we were shutting down. But by that time, I was a co-GP on about 800 units.
Wow.
Um, and sorry, I think it was an LP in 800, co-GP in 400, but it
Hmm.
was still, enough for to give me a taste of how it is to be a co-GP.
Hmm.
And I just had to make a decision. Do I go back to engineering, or do I, pivot into commercial real estate and join a sponsor? At that point, I was not even thinking about joining a sponsor. I just want to be a co-GP and
Hmm.
partner with good sponsors. And that's kind of how it happened.
That's amazing. So you were given a choice very easily. It said, "Hey, you're laid off. Either you take the path to the right or the path to the left. Your path to the left, you go into commercial real estate full time. Path to the right, you go look for another job." I think the cool thing about that is you can always go back down the path to the
Right.
left too. That it
Yes.
sounds like you have a great reputation working as an engineer. If for some reason you ever wanted a full-time job again, you can go get it very easily.
Yes. And I am a licensed professional civil structural engineer.
Mm.
So there's a lot of demand for civil structural. And I don't ever see myself going back to engineering, but
Mhm.
you're right. If I wanted to, it'd be an easy switch.
So it's interesting. I've met so many people in commercial real estate and specifically apartment syndication who are former engineers. Do you have any idea why that is, or why do you think that is?
I do not know. So I can only speak for myself. I think,
Hmm.
um, a lot of people ask me, do you miss engineering? Because I did that for 14 years.
Yeah.
And for me, the part of engineering that I enjoyed was the numbers and the people. And real estate is not very different. It's
Yeah.
all about people and all about numbers. So I don't really miss it. It's kind of the same to me,
Okay. That makes sense. Yeah, because again, you go to these conferences, like these apartment syndication conferences or
right?
commercial real estate conferences, and everybody who's either an LP or a GP, I would say half are engineers.
Really? Well, that's good
Yeah,
to know.
so many. There's one in Dallas actually in about a week and a half, maybe a week. It's called the Old Capital Conference.
Oh, yes.
Yeah.
Julie.
Yeah.
Right.
Um, they so many engineers at the Old Capital Conference, and that's probably my reference point for that because that's one of the first ones I went to, and I met so many people there. They were former engineers
Ah, good to
or
know. Maybe it's
currently
just the
engineers.
numbers. Yeah.
Yeah,
Could be the love of
yeah.
numbers.
I'm sure it's easy as an engineer to look at the numbers and say, "Wow, this just really makes sense.
Right.
Why would you not
Yes.
do this?"
Right. That's how that's how I ended up with syndications.
Hmm.
I was looking for an investment vehicle for our own savings, me and my
Hmm.
husband. And I was like, okay, something's got to make sense. And we were looking at um, single family residences.
Hmm.
And I looked at the numbers on a syndication, and I go, well, this just makes more sense. And there's so much redundancy with the tenants. With single family, there's only one tenant.
Hmm.
With multifamily, there's redundancy. I do own single family rental, so
Hmm.
I'm
Yeah,
not
me
knocking
too.
single family rentals, but
Hmm.
yeah, it just made sense.
Yeah, no, I own both too myself. I have some single families, and then I'm invested passively in a couple syndications, and
Oh, nice.
I don't own any commercial real estate as a sole owner anymore. But I see what I understand what you're saying, and the really the only way I see to get that scale with single family is just to buy a ton of them. I think you can
Right,
get it too, but you do run into the same operational inefficiencies of, one house, one tenant when you
right,
have 30 houses, 30 tenants for other reasons. You do have if you get a little bit of vacancy, it's not as big of a deal, but they're all spread out. They might be built
right,
differently. It's a different game.
right, right. Every every house is different.
Yeah.
And yeah, with an apartment building, with the asset, there may be like 18 buildings. And if you
Yeah.
know one, you pretty much know every one of them because they were all built at the same time by the same builder.
Yeah.
So,
Yeah, and the scale's so much easier to achieve. So I've got to
right,
say, like, we buy houses. We're still buying houses. We'll continue to buy houses, but we buy houses that are exactly the same in this area where they built all exactly the same house, and that's why we do it. But at the same time, to buy 50 houses, I have to buy one or two or three or four at a time.
right,
And there's just no
right,
scale in it. It's not a good way to scale up quickly.
right.
It's cool, it works, but it's very slow and laborious and challenging.
You're right. I read in a book that said, the difference between a smaller deal and a bigger deal is just the number of zeros.
Hmm.
And maybe a little bit more work on the bigger deal, but the amount of work is not exponentially more for a
No.
bigger deal compared to a smaller deal. So the first LP deal I invested in was a 76 unit.
Hmm.
And I was like, okay, that is big. And then I read that it has to be at least 150 to get efficiencies, economies of scale and
Hmm.
efficiencies that go with it. So I was like, oh, so that was really not big enough. It needed to go bigger. So,
Yeah. I think it's easy, especially when somebody's newer, to not know that. I mean, 76 units, yeah, that sounds huge. And it's the same thing if you bought one single family, a 6 unit or an 8 unit sounds huge, but there's really no
right,
efficiency to buying eight and
right,
one. But
right,
you got to get bigger. You got to get in the
right,
100 plus or 150 plus.
right. I've heard from sponsors that they can get good efficiency starting at 80 units.
Hmm.
But being an engineer, I want to double it for a safety factor.
Yeah.
So let's just say 150 units is where I feel comfortable.
Yeah. No, I love that. I think there's so much of a risk, and I like you said for a safety factor, there's so much of a risk saying, hey, I can get there if I just do this many. So let's say it's 80 units, but if you've got double that, you've got the capability to hire that many more people and have that many more redundancies, and
Right,
that much better management and XYZ.
right.
So
And the cash flow can support on-site teams.
mhm.
So, which is good for the residents, um, just the way they feel about the property, resident experience.
Yeah, no, it's huge. And I think a lot of people who want to live in those communities, if you want to live in an apartment building, you typically want everything taken care of for you.
Right,
And if it's
right,
not big enough to support a good team, that makes it more difficult. The resident experience is not so good. And, you've got more turnover and more capital
right,
expense and maintenance costs.
right, right. At JT, we go after institutional grade assets. So we want really good concierge service, really good leasing agents, really good maintenance technicians and maintenance managers.
Hmm.
So we're going after providing luxury
Yeah,
amenities. So we really need a good team.
that's awesome. There's certainly always a market for that. Deepa, what's the biggest mistake you've made in real estate investing, would you say?
Biggest mistake. So I don't know if this applies to real estate investing, but just trying to do everything myself when I
Hmm.
first started. I was like, just what happened when I tried to do everything myself is I just ended up fighting fires. and not really doing the tasks that would actually move the needle.
Hmm.
And now I know we have a couple of VAs that help us out, live and learn, right?
Hmm.
So
So was that on the GP side? You're trying to do everything yourself?
yes, yes, as
Okay.
a co-GP
Yeah,
and
no,
as a, yeah,
no, I love that. I mean, I think that that's anything. If you're focusing on getting everything done, you can't focus on your one thing that makes a huge difference.
right, right. And what changed my mind was that I read a book, I think it was by Brian Tracy, Eat That Frog.
Hmm.
Just do one thing at a time and do the thing that you dislike most first thing in the morning. Just get it done. Eat that frog. So I was like, okay, maybe I should do that. And the other, there's smaller tasks like coming up with meeting requests and just putting schedule together, that kind of things. A VA can handle it much better than we actually can
Hmm.
because they're trained to do that kind of thing. So
Well,
just
and that's
delegating
their
all of
one
that.
thing, that's their
Right.
thing, rather than you
Right.
trying to do it and being sort of good at it, which I'm
Right.
terrible at most of those things. You have somebody that specializes in that.
Right. Right.
Yeah, well, that's so
Agreed.
important. That's a great book too. Um, Deepa, if you had to start over today, is there anything you'd do differently? So we didn't talk about when you bought your single family rentals. Did that come first?
Yes. So we did not buy anything that as a rental. We
Hmm.
just bought a house, lived in it, and then moved
Smart.
and did not sell the house and just kept it as a rental.
Hmm.
So, you know, um, so we don't have any single family. I just have one house that
Hmm.
is a rental by choice. I don't want to sell that house. So just holding on to it for now.
Hmm.
And, you know, if I would have to start over, I think I would just work at um, an institution, a big institution like a PM company,
Hmm.
to know the procedures, what are the best practices. Because my career trajectory, the way I took it, I started as an LP, became a co-GP, and then
Hmm.
now part of JT. Um, it would have been good to kind of learn the basics as what a property management company does, on site, what
Hmm.
they do to help the residents, and so that we can, as asset managers, help our community managers better. You know, if I knew how long it's going to take, now I know because I've been doing this for a while, but
Hmm.
in the very beginning, it would have helped to know how long it takes to do a task.
Hmm. Just having that insider knowledge, I think that's so
Right.
powerful.
Yeah, yeah. And before delegating anything, um, I try to do it myself just to kind of see how long it takes. If
Mhm.
not, you're completely dependent on the VA to know how long a task takes, you know.
Well, yeah, you have no reference.
Right,
Yeah.
right.
Well,
Yeah,
that's so
just
smart.
yeah, it's been good to have a reference. But
Hmm.
now, doing this for a few years, you just learn by osmosis.
Hmm. Yeah, and I find a lot of times that maybe I move quickly compared to other people. So I don't expect things to be done as fast as I do them, but I know if it's not done in a longer period of time, like, hey, that's a simple process. You only have to do this,
Right,
this, and that, and
right,
it can get done.
right.
Yeah. And Deepa, what are your long-term goals for real estate investing, and where do you see your career going here?
So, long-term goals, at JT, we'd like to scale and acquire a lot of assets coming online,
Hmm.
not particularly distressed assets, but we think that the buying season is gonna open up again
Hmm.
because we haven't acquired an asset in the past 12 months
Oh yeah.
and nothing that came across the desk made sense. It didn't pencil out. So we're
Hmm.
just patiently waiting. So
Because of
looking
debt
to scale.
maturities, stuff like that.
Yes, yes, because of that and the insurance cost and, you know, the sponsors that are selling right now
Hmm.
are the sponsors that have to sell. If you don't have to sell, I don't think there's anyone putting the properties out on the market.
Hmm.
So if
Yeah.
there is an opportunity, if we can add value, then we'll acquire assets. We're looking forward to acquiring more assets in the next few quarters.
Okay. Yeah, I saw an interesting graph today, and it showed what debt maturities were coming, what came in 2023, and it was mostly office. The largest
Right,
contingency or the largest tranche of this graph was office. But then it showed next year, 2024, and there was a lot of multifamily debt maturing when I think rates are still going to be pretty high, and people are either going to have to sell or bring a bunch of extra capital to refinance.
right. We're already seeing that some of the sponsors are having to have cash calls to refi.
Yeah.
So we're already seeing some of that happen already.
Yes, I think you're right. I think there are going to be some good multifamily buying opportunities in the next year. And I'm no expert. It's just a graph I saw earlier, and I said, "Well, that's interesting." You
Right.
know,
Put two and two together. Yeah.
yeah. If there's a bunch of debt maturing next year, that let's say the minimum term on it was 2, 3 years, probably the more likely term was a 5 to 10 year term. So they bought that somewhere between 3 and 10 years ago. The debt matures next year when the rates are significantly higher than they were 3 to 10 years ago.
Right.
They're probably not going to be able to refinance, or they're probably going to need to fire sell, or bring a bunch of extra capital to refinance.
Right. Right.
Yeah.
Agreed.
So should be interesting. Again, podcasting and predictions have taught me that I will say stuff that I just couldn't believe couldn't be true. And then a year later, I'll look back at that podcast and say, I was out of my mind. That didn't make any sense. So there's a great chance that I'm completely wrong for anybody listening.
Well, we'll see.
We'll see. Yeah. Yep. Deepa, do you have a favorite book that you like to recommend to people?
So, my favorite book is Principles by Ray Dalio.
Hmm.
I just finished reading it, and he just did an amazing job of explaining how he built Bridgewater Associates. And um, what I liked the most was the radical transparency. So, that's a great book for people to read out there to gain perspective.
Yeah, no, he's amazing. He's such a smart guy. I love Principles, and he has another one. I want to say it's called Big Debt Cycles, or Principles for Navigating Big Debt Cycles. I'm probably butchering the name, but if you enter something like that, you'll find it. It was really good. I just finished it too, but amazing books. Principles was also one of my favorites. Deepa, what's the best way for people to get a hold of you?
LinkedIn is the best
LinkedIn?
way to get a hold of me. Yes. My full name is Deepareddy Akula. And if you type that in, you should find me.
All right. And we'll make sure that's in the show notes here too. Deepa, thank you so much for coming on here today. Again, I know we had some scheduling issues, but I'm glad we could finally get it worked out, and the persistence paid off.
Yes, thank you for having me on. It was such a pleasure.
Absolutely. Thank you so much. We'll talk here soon.
Talk to you soon.
Bye.
Bye.